So now we are going back to our given information. And if we didn't do anything wrong, everything that is not highlighted yet should be a general journal transaction or transaction that must be recorded in the general journal and will be indicated by a journal voucher with the JR prefix. So let's see if that's true. And what did I use? I used a purple. So here we have JR 253. Let me find a nice purple for that. I clearly can't find the same purples anymore. So this thing calls it gray. This is blue gray, so maybe that was the one. I'm going to work with it in any case. So it's 1, 2, 3, 4, 5 transactions, and I'm relieved because I can see that we didn't miss anything. Okay, so let's have a look at all these transactions. So it says to us that on the 12th, Anton Rush, our owner, he contributed a delivery vehicle to the business, and what is more, all legislative requirements have been made for the full VAT amount to be claimed. So this is wonderful. Not only is he contributing the delivery vehicle, but we can claim back the VAT. Okay, so let's see what's happening here. Well, poor Anton had to pay VAT, so I guess we're just going to return it to him. So we calculate vehicle as follows and record it as a debit. So what we are going to do, we are simply going to divide it by 1.15 and we get the amount. Then we are calculate the input VAT as a debit, and we do that obviously by finding the difference between the two amounts, and then we post the full amount as capital contribution, and we post it as a credit. And now you are confused. And the reason you are confused is because I haven't done it like this in the other transactions. In the other transactions, I would have said, let's record the full amount as capital contribution and then calculate vehicles by dividing with 1.15 and then calculate the difference as VAT. But now, when we are working in the general journal, it says that we must record the debit accounts first and then the credit accounts. Let me quickly go in here and show you how it works. You see, the accounts that are being debited, we write next to the line, but we indent the accounts that are being credited a little. So look at those. Vehicles and input VAT, because both of these are going to be debited, they are right next to the line. But capital is a little bit to the right. It's indented a little. And that is why I calculated the debit accounts first. Okay, just so that when you complete the journal that you don't get confused. So now let's do it. We said, okay, now I haven't done this yet, so I was still supposed to white it out. So let me quickly white it out quickly. Okay, so we've done that calculation, remember? So now we are saying, okay, the document number given, no problem. The date given, no problem. The first account that we are going to debit is vehicles, because it's obviously an asset account that's going to be debited. And another account that's going to be debited is our input VAT, because they said to us that we can claim back the VAT. And then the account that's going to be credited is the capital account. We don't have folio numbers. Okay. Now you could, once you have the account sorted out, you could actually just follow the old reasoning and say, okay, the capital contribution that's made is for the full amount. Vehicles is the amount excluding VAT, and the balancing amount or the difference amount is the input VAT. Okay. And then the other thing that we must do in the general journal, because we don't have a special column for it, Okay, we need to put something under the details column that just explains a little bit what was happening. And here we said what happened is that the owner contributed a delivery vehicle, which was much what was given to us. It says Anton Rush contributed a delivery vehicle. But then I just said the owner contributed the delivery vehicle because maybe the person working with it does not know that Anton Rush is the owner. Okay, so now let's go and have a look at the second transaction. It says that on the 20th, okay, we received from Tinderbox a 5% settlement discount, but it refers to this check 543 that we did when we recorded the cash book payment. So what happened there? Let's go and have a look again. That one, cash 554, where we calculate the amount that was paid and then the amount that went off the creditor's control. So we did all of that. Now let's go and have a look here at the cash book, at our general journal. It says, calculate the amount outstanding as follows. Well, the amount that was payable was 34,776. How do I know that? Well, let's go there. You see, the amount that was payable was this. Okay, was the 34,776. But then we only paid 33,037. Okay, so now what we are going to do, we are going to say that was the amount payable, and then we are going to subtract the amount paid. So the amount that's outstanding, our discount amount, is 1,738. Okay, and what we can then do is we must obviously debit creditor control with that amount. Okay, the full amount, that amount, because or else there's still going to be a balance outstanding on our individual credit account, and we don't want it because we've settled that account. So therefore, we are going to debit the creditor's control account with a full amount. Okay, then we are going to calculate discount received as follows. Okay, we're going to divide by 1.15 as always, and then we are going to calculate the output VAT as the difference. Now, you would say to me, normally when we work with creditors control as an account, we do not record the VAT because I said that we dealt with the VAT when the payment was made. But what's happening here is because we are receiving a discount, the amount that we initially claimed from SARS for that transaction when we bought the trading inventory is actually less. So SARS is saying to us, wait. You are paying less for this than what you said when you claimed the VAT original. So now you must pay back some of the VAT to me to make sure that we are actually squared. They don't allow us to get away with it. So this is then what happens. So we debit the creditor's control with the full amount, we calculate the discount received, and we give SARS what is due to them. And then we simply go and we record the transaction like that. We say, okay, we have the document number, we have the date. We know that the account that must be debited and therefore not indented is creditor's control. Okay. We know that we have a discount that was received, and we know there is an asset account that must also be not an asset, a liability account that must also be credited, and that is VAT output, and that the debit amount must be the sum of the two credit amounts as we just calculated it there in the calculations tab. And now we need to say, so what happened? Well, we received a 5% settlement discount from Tinderbox, and that is what we put in there. We received a 5% settlement discount from Tinderbox, and now we've recorded that transaction. Now let's go and look at the third one. Third one that says, okay, Anton Rush, our owner, comes in and he takes from the trading inventory. But when he takes it, the trading inventory is already marked for sale on in the shop, and we see that the amount that it is marked at is 1,750. But now that is not the value of the drawing. He's obviously making the drawing at the cost price. So what are we going to do? We calculate drawings as follows and record it as a debit. We say, okay, that is the amount that we have. Firstly, let's take out the VAT and we get to 1,521. Okay, then we take the amount that we have and we divide it by 1.16. And you say to me, stop. Where does this 1.16 come from? And I say, well, we have to go right back at the beginning to our given info. And there in the given info, it said to us that the business uses this part here, a periodic inventory system, and trading inventory is marked up by 60% on cost. And because we are working with creditors journals and we don't have cost of sales because we are working with a periodic inventory system, we haven't used it at all up to now. But now we have to use it, okay? Because we want to find out what's the cost price of whatever Anton is taking. So we divide it by 1.16 and we get an amount of 951. But when we bought that trading inventory, obviously we paid VAT on it, okay? So now I want to now basically record this as a transaction. So I must calculate the VAT so that I can see what the full amount is that I must use for drawings. It is both the trading inventory that is taken as well as the VAT, because we will need to to indicate this now as a sale and therefore pay VAT on it, because when we made the purchase of the trading inventory, we claimed the VAT. And SARS says you can't claim VAT and then not pay us back, so you must sort that out, and that is what we are then doing. Okay, so let's follow the process again. You start with a marked price, you divide with 1.15 to get the sales price without VAT. Then you divide with 1.6 to get the cost price without VAT. But we claimed that when we made the purchase of the trading inventory. So now we are basically selling this to Anton. So we must, even though it's not paying anything, it's just a drawing, but we must calculate the VAT because SARS wants what's due to them. And then we can actually calculate the full amount that we must debit drawings with, and that is the VAT exclusive, or the cost price plus the VAT, and that'll be the VAT inclusive cost price. Okay. The trading inventory are then going to be the VAT exclusive amount that we already calculated there, and we also already calculated the VAT, and both of those amounts will be credited. So let's quickly do that. It says we have the document number, we know when it happened, we know that the amount that must be debited is drawings, okay, and we know that the two accounts that must be credited is trading inventory and the output VAT. We know we calculated the drawings very carefully and we got to that amount. When we divide by 1.15, we can get to the trading inventory, and the VAT amount or the balancing amount is simply the difference between the two. And like always, we have to explain what happened. And when we do that, we say the owner drew from trading inventory. Okay, that's simple enough. Now let's go to the second last transaction, where it says Round Track Industries. Now what happened here is we were late in paying our account to Round Track Industry. And so they are now charging us interest on the overdue account. Okay. When they are charging us interest, we are going to debit interest with the full amount, and we are going to credit creditors control with the full amount. Okay. There's no VAT applicable because the rule says that per definition, interest is VAT exempt. So they now try charging us interest, but it's our own problem that we are paying interest. We can't say, hey, I want to claim VAT on that. And so therefore, we cannot claim VAT. It's exempt. Okay, so What do? We already said that we are going to debit interest charged with a full amount. We have that information already. So we are debiting interest charged with the full amount, and we are crediting creditors control with the full amount. We now owe them 350 Rand more than what we did at the beginning of the month, and we need to explain that. That's the interest charged by Round Track Industries. And then that creditors clerk is going to be in trouble because the boss is going to say, why did you not pay the person on time? I'm going to take that from your salary because you now cost us 350 because you made that payment late. Okay. That's just a bit of what happens in the real world. Nobody said it happens in this exercise. So don't make a comment about that. Okay, and then the last transaction that we need to look at is they say to us, it was realized that office equipment purchased for an amount during February 2020, the previous month, was incorrectly, erroneously debited to office consumables. Correct the error. So the only thing that we're saying that the VAT, everything else was recorded correctly. The problem was that when we debited this transaction, we debited against office equipment, we debited against office consumables instead of office equipment. Okay, so we need to fix it. If it was wrongly debited to office consumables, then we must now credit office consumables, and therefore we must debit the correct account, which is office equipment, both with the full amount. Okay, that's given there. This would be an amount excluding VAT already, but whether it is office equipment or whether it's office consumables, it's not like the one account is VAT exempt and the other is not. Both of them are standard VAT category accounts, so we don't have to worry about that. So we go to our general journal completion. We, of course, have the number. We have the date. We say, okay, office equipment must be debited. That's the one that should have been debited and not office consumables. So let's just make sure that we write back that transaction by crediting office consumables and debiting office equipment as we should have done from the beginning. And let's explain what happened there. When we explain what happened, we just say it's a correction of an error. And that is it. Okay, and here there is no need to add up anything, because what are we going to do when we work with our ledger? We are going to look in our general journal and we are going to debit or credit the individual accounts as they reflect here.